Hello, everybody, and welcome. This is Managerial Job Order Costing. This is part 6, the over under applied factory overhead, cost of goods sold, and gross profit. So we've been going through and working through our questions. So let's go ahead and wrap this up. So when I look over here, what have we done so far? Well, we first read through the question. Second thing we went through is we've been put in the various different values. The third thing we went through and did is we went through and we figured out what our indirect materials were, what our indirect labor was. We then went through and said, okay, here are like the various different jobs going through. Now for this last part, what I need to go through and do is I'm going to zero out the factory overhead T account. The reason why I'm waiting to do this until the very end, because if the amount is not materially significant, I'm going to adjust it to cost of goods sold. So let's go through and see how we do this. So the amount of overhead I applied was 60% of my direct labor cost, right? So basically it was going to be 276 or 90, 54, 96, or 36. So those direct labor costs during the month, I applied my overhead based on that. Over here, my actual factory overhead was 10 plus 80 plus 33 plus 85 plus 44 plus 27 or 279. As we know, this account has to have a zero balance. Factory payroll has to be zero. The only accounts that can have balances are raw materials inventory, work in process, and finished goods. So over here, if I have actual amount of 279, applied of 276, this gives me a balance of 3. This has to go to 0. So what I'm going to do over here is I'm going to go ahead and debit this account for, let's try this one. So I'm going to credit factory overhead for 3. When I credit factory overhead for 3, this account is going to go to 0. Now, for every credit, I need a debit. My debit, because the amount is not very material, okay, I'm going to put it to cost of goods sold. And let's go through and kind of explain what I mean by it not being very material. Okay, so over here, this is at 3. Okay, so my ending amount now in cost of goods sold is going to be at 917 plus the 3 or 920. Now, when I look over here at my total cost of goods sold, my total cost of goods sold is 917. My adjustment for under applied factory overhead, and I'll talk about what that is momentarily, was at 3. As a percentage of cost of goods sold, this is immaterial, right? So 0.33 is not material to cost of goods sold. And the reason why this is extremely important that you quantify this, if you're asked to do it, is that if it's immaterial, I can just put it to cost of goods sold. Why is that important? Well, cost of goods sold in the mind of an investor is what the goods cost us. If the amount becomes materially significant, then I have a problem. Okay, so to do the journal entry to record this, what it's asking over here is what is the journal entry to record the amount of the under or over applied overhead? Okay, so over here, so I had a balance of 3. I needed to credit factory overhead for 3, and this is going to be on 9/30/24. So for every debit I need, or for every credit I need a debit. What account did I debit? Well, if it's not materially significant, I'm going to go ahead and debit cost of goods sold. Now, when it comes to the description, okay, this is to adjust for under applied factory overhead, right? I had more actual than applied, so I did not apply enough. This is only 276. I should have applied 279. So this is going to be to adjust for under applied factory overhead. This is why the T accounts are so important in these questions. If you're not using T accounts, I have no idea how you're going through and doing it. Okay, so the last part of this question is asking us to go through and do. So I've done the journal entry to record the under or over applied amount. I'm now being asked to determine cost of goods sold. Well, my cost of goods sold after the adjustment that I just made is now at 920. Over here, my total gross profit for the month ended is going to be how much? Well, let's take a look. So my sales revenue, and I had two jobs that I sold. I sold job 100, job 101, right? So my total sales is going to be, so job 100 sold for 1,200, job 101, excuse me, job 100 sold for 1,200, job 101 sold for 950. So this is 1,200 and this is 950. So my total sales are going to be 2,150. When I look over here, what is my cost of goods sold? Well, I just figured that out. My total cost of goods sold is going to be 920. So my gross profit is going to be 1,230. For if you're taking my class, all you have to really kind of go through and do is just, show the total amount of sales minus, I don't need you to allocate the cost of goods sold between the accounts. So that is the last part of this question in terms of going through and dealing with the under applied factory overhead and also dealing with cost of goods sold. So as always, I want to go through and thank you for joining me here today. Please appreciate you liking and subscribing to my content. If you have any questions, feel free to leave it in the comments, and I look forward to seeing you on the next video. Have a great day.